A new week and another warning about risk with the S&P 500. Many investors feel comfortable with the S&P 500 because it keeps going up, and investors feel, well, that will continue. We can't tell you when it will decline, but I believe it will. And let me give you some scary information when it comes to risk with the S&P 500. Technology now accounts for almost 35% of the index, and that is an increase from 32% at the end of 2024. Now, 7 years ago, it was just 20%. You may be surprised by this, but tech companies like Meta, Alphabet, Amazon, and Tesla are not considered technology companies. If you were to add those to the tech weighting, which I believe most people would consider them tech companies, technology makes up 45% of the entire index. That's just too scary for me. Another concern with the overconcentration in the market is Nvidia, with a market cap of $4.4 trillion, now accounts for 8% of the entire index. It's crazy when you compare that number to the entire healthcare sector at $4.7 trillion, and energy, well, that's at $1.5 trillion, which is just 3% of the index. With investing, it's important to understand what price an investor is paying for the sales of a company. On a historical basis, paying 10 times for the sales of a business used to be considered just way too risky, way too overvalued. Today, Nvidia trades at over 20 times 2025 sales, and the hot stock, Palantir, well, that's around 100 times sales. Healthcare, energy, and financials are all looking far more attractive, trading at 15 times earnings, not sales earnings, rather than that top line sales. Tech companies trade at a higher valuation because they generally have less expenses on capital expenditures, like an energy company would have. But AI, well, has changed that, considering Alphabet will probably spend somewhere around $85 billion expenses this year, compared to only $52 billion in 2024. Looks even worse for Meta. Meta is estimated to spend about $70 billion on capital expenditures, and that's nearly twice the $39 billion on expenditures it spent in 2024. Now, no one knows when the big downturn will come, but I'm sure you've heard the old saying, the higher it goes, the greater the fall. Investors need to be aware of what they're paying for their investments and not think that it will continue to go up just because it's gone up in the past. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to get a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.